Sticking with the jobs report, here's what NEC Director Kevin Hassett from the White House said last hour about it here on CNBC.
There have been so many strong indicators this month that it's something of a surprise, but there's some weather, there are strikes on the West Coast, and I think that we also have this birth-death model, a change in the procedure at the BLS. And so I think what we need to start doing with these jobs numbers, at least on the payroll side, is take the average over a few months. And if you take the average over a few months, we had a surprisingly positive one last month and a surprisingly negative one this one. But on average, it's about what we expect to be seeing.
Let's bring in Jan Hatzius, chief economist at Goldman Sachs. Is he right to dismiss this weaker jobs report, strikes, weather, one-offs?
Well, it's certainly true that strikes subtracted, 30-something K, and the weather, I do think, had an impact. I also agree that we should take an average. These numbers are always noisy on a month-to-month perspective. If I do take an average, though, it's still a pretty weak labor market with very little job growth and zero job growth, or negative job growth if you take out healthcare, which is pretty narrow base. So while there is a lot of strength in the underlying growth picture and the productivity picture, we're now dealing with two issues. One is that the labor market translation of the growth picture has been pretty weak, and now, of course, we're getting an energy price shock, which is unfolding. So we're going to have to see how big it is. At the moment, the numbers that we're getting out of translating current oil prices into headline inflation boosts and growth drags are not that big, but obviously it's a very fluid situation.
So is stagflation the right word to use, or no?
Directionally, that's where, of course, the recent shocks have been going. It's always, a word that people use easily. I don't think we're in a stagflationary environment yet, but yeah, the shocks have been pointing that way.
I'm thinking back to last spring, Liberation Day, tariff turmoil. You were, I think, relatively quick to move the dial on your recession risk. Is that in the mix now or no?
Well, I think directionally it probably is going in that direction. I mean, we came into the year with a 30% recession risk estimate for the next 12 months. We lowered it after the better employment numbers that we got in early January, and directionally it's obviously going higher at this point.
So do you think the lack of job growth is because of the immigration policy?
Well, I think the slowdown in labor force growth because of immigration policy has been one reason why the weakness in job growth hasn't translated into as much of an increase in the unemployment rate. That, I think, is certainly true. We would have seen a significantly bigger increase in the unemployment rate if, break-even payrolls were still 100,000 plus, but break-even payrolls are, 50,000 or less. So that's obviously an important factor.
And what explains claims? Why are they still so tame? Is there a good theory behind that?
Because I think we're still in a low hire, low fire environment. So, job openings are still trending down. And the latest JOLTS number, of course, was quite soft. But we have seen not really much of an increase in layoffs. So that is good news in the sense that, it doesn't look like anything's breaking from the layoff side. But obviously, that's something that we're going to be watching very closely.